desktop. Okay, so we are recording now. How you guys doing? Let me just share the desktop. Okay, let me know when you see it. See it all good? All good? Let me know. I just shared it. See the desktop? Okay, great. Thanks, dudes. Alrighty. All right, so just wanted to let you know I'm just experimenting with some stuff right now and concerns of blogging. So I know it doesn't really impact you, but I'll just show you what I posted. So right now, we've had a good run up with crypto for the last couple of weeks. I predicted about a week ago it would drop off, and guess what it did? It dropped off. And I've been looking for some other better performers out there, and I'm not sure if I could say I found them, but I'm sure you know about them. This is outside of forex and crypto. This is just standard investing sort of stuff. So if you look at CFDs, I would never recommend anyone to get into CFDs, like trading them. But through the options and forex options and futures market, there's definitely something to say about them. But right now, I just want to show you them. A CFD, contract for differential. You're in the States, right, Al? They are banned down there. This is why I don't really recommend trading them, but they are good for watching, because this gives you, it's like a poor man's way into the futures and options market. So it just gives you an idea of where to go. You can do this via ETFs. You can definitely do this via a derivative from an equity or whatnot. But this is what's been going on. As you know, the market's been turning. So I just want to show you, this is one of the reports that I can run. And these are, let me show you the top performers. So right now, I generated these maybe an hour or two ago. So there's a few things that we can take away from this. And again, this is from Oanda. But these are the sort of performers right now. And this will give you an idea right across the board, all the different assets from agriculture, financial like Treasury or any other bond, UK or Germany. Also, we cover agricultural commodity, which would include precious metal like a gold or platinum or silver. Hey man, hey Nimesh, how you doing? We also have covered stock indices, so it covers pretty well all financial instruments out there. That's why I like them. So, you know, you're not only doing well in crypto or forex, but you can do really well in these other markets, the ones I'm highlighting here. So, for instance, in the last few hours, I know you know about probably the protests in Hong Kong. Well, the question is, why is the Hong Kong 33 up when this file was generated, up 5% in an hour? Or why is NASDAQ up 3.24% in an hour? So these are the sort of things that there are other opportunities out there, and that's why I like CFDs for that. But if you have access into the markets via, as I said, ETF or some other maybe through interactive brokers, these are really good assets or instruments to trade and watch. So that's what they bring to the table. So right now, the hot ones, in the last few hours, as I said, was the Hong Kong 33 and NASDAQ 100. So they're just as good as, the performance is just as good as crypto. I never see forex do this well unless there's some kind of market event. But these things can do really well, and I constantly get people asking me about if I do indices. I do, but I would like to, but right now I just focus on the poor man's way to get in the markets, and that's through either forex or crypto, because there's no minimum that you need to trade either crypto or forex, but there are other assets out there that do outperform. So I'm going to show you some other ones that do really well. So this is a similar report that I can generate through my forex, but this is for CFDs. Now, these are in order of what it forecasts or performers. So when you look at just a simple U.S. Treasury 30-year bond, it's doing all right. Here's a cross signal and it's moving up. So these are really good defensive plays when the markets do well, especially the equities. The other safe havens do well as well. And U.S. Treasury right now are the top performers without a doubt. Just depends upon what maturity date you want to look at. So right now, crypto is down. It's been down for maybe a couple of days. I predicted it was going to go down, and it's down about, I think Bitcoin went down just alone on Saturday about 16%. So you have to diversify to get stellar performance. You got to look for the ones that give you the best performance in real time, and that's what I do with these CFDs. So here, again, I'm just showing you the different maturity dates of the U.S. Treasury. So that what I just showed you is the 30-day. So here, the short-term Treasury is doing really well. As you can see here, it's way above trend in the last probably couple of weeks. So this is doing really well, and it's still within the value in the golden zone in the Fibonacci. So these do pretty good. The volume can do really well. When the markets tank, everyone will dive into the world of Treasury, and everyone's thinking gold's the best one. It's not. It's Treasury is doing really good. So short term, that is, you can see some of these moves, and you can trade them no different than forex or crypto. The problem is with CFDs, there's no liquidity in them. I would never, as I said, trade CFDs. This is one of the big reasons why CFDs are banned in the States. But again, it's just a gateway into the world of Treasury or into the futures or options market. And you can see these are big moves. These are not small potato moves, and that's what I'm highlighting that these cannot be ignored at all. Right here, this is a 2-year trend. A 2-year bond. And it's right now just going into the historical golden zone. So if the markets do tank, we now have a safety haven to invest into. And there's not just this, but right now the star performers are Treasury, just different maturity dates. Here's a 10-year, and here's a signal, and it's done nice performance. Again, nice performance here above trend, even though the trend has been down. But I do believe that this is where the markets will go. This is where the hot capital goes, is into Treasury, and let's get out of that. Now, other areas that this CFD analysis gives you is look at the 10-year bond for UK. It's I don't know. It's just you're missing out. That's all I can say right now on this. And this is something that you need to know about. So that's the UK. It's right now on a flat trend, again, depending upon how the markets perform. But when the markets don't perform and they tank, you go into Treasury or into bonds or other areas as well. Now, here's another interesting one. Look at these nice up moves with France. This is the France 40. So this right now is the best performing stock exchange in the world, as far as I can see. I'm talking long term, and nobody talks about it. But this is what my system's seeing. It's a little overvalued, but you do get some nice uptrend moves that I'm sure you don't know about. And I only know about it because I'm running the data. Like, look at this massive move right here a few days ago. Just unbelievable what you could be missing out. Here's a Deutsche. This has been a nice, steady trend. That's the Deutsche 10-year bond. Again, really good, stellar performance. Not intraday, but there's spurts of trends that do really good. So that's a Deutsche. We've seen the UK, the U.S. Treasury is doing really good as a defensive play. Now, as I said, you think that the Australian market would be really good, but unfortunately, it's doing okay. But there are better performing instruments out there doing much better. And here's Australia. So this may outperform the U.S. So there might be some buying opportunity there on an intraday level. You can see some of these nice big bar moves that, again, you're probably not noticing. Uh, and here's the interesting one. This is China now. So one of the things I think why China's playing hardball is because the market is doing not as bad as you hear about in the media, and I think that's one of the reasons why the Chinese are playing hardball when it comes to the negotiations on the trade war, because there are times when it is above trend, like it is doing now, and the Chinese can definitely afford to do that and spook the U.S. markets, and then spook Trump, and then Trump has got to go back to the negotiating table with softer. He doesn't have as much leverage as you think he does. And again, you can see these points where the market's doing well. And, I mean, it's in line with the U.S., but if you listen to Trump and Trump only, you think that the Chinese markets aren't doing well. But here, they're doing all right. They're not doing as horrible as you think. And you get some nice big moves on the Chinese top 50. So that's something to look out for. Now, okay, let's talk about gold. Any questions so far? So I've shown you the Treasury bond and some of the equity markets. So from Nimesh, can everyone else mute if you're not talking? I'm hearing background noise. I can definitely do that for you, Nimesh. Just give me a second here. Yeah, so okay, so we're all good. Okay, so I can continue, I guess. So one thing, everyone thinks of gold. Gold's doing really, really good. But there's something that can do better, and that is called the gold-silver ratio. I talk about this. This usually can... Go ahead, Spindiz, if you got a question. Go ahead, man. You want to type it up or unmute yourself, or I can unmute you, or however you want to do it. Above Nimesh's comment. Okay, hang on here. And you get all of these through the Oanda API. Yes, this is all through Oanda. These are CFDs. You can kind of get them also through Duca's copy, but I find that the just Oanda overall, like we did a comparison, Oanda's bigger, much better selections, there's a little more liquidity. Duca's copy is too small, but I do like Oanda's. Coming in. It's Jason, how you doing, man? Okay, so we can continue. Okay, so we're talking about now gold, precious metals. So as I said, I was talking about the gold-silver ratio. Everyone thinks that gold will be your best performer, and it's doing okay short term, but long term you'll get better performance out of the ratio here of gold and silver. And it's just starting to take off now. But it depends upon, again, about the equity markets. And that's one of the big factors. So here you can see these moves. I can show you the 30-day right here. Really nice moves. And again, you're missing out. And even if you were just exclusively trade gold, you could also deploy capital here on this ratio as well. On, again, the gold, silver. And it's been doing really well. So that's something I would definitely consider. Like these are moves, if you were just betting on crypto, you'd be doing maybe okay or it'd probably be in the hole. But here you have a new asset class to trade that is performing and performing well. One thing I need to mention here are these overextended wicks. These can be good signs of how the next day the performance can be. And it's starting to prove to be a reliable resource as to see if there's going to be any upcoming big moves, and this one definitely was the case. Okay, so now we're getting into gold itself. You can see here that there's just been a recent uptrend move right here again, and let me just show you. So you can just see gold has been on a major tear, and the performance has been awesome. But again, you want to definitely, if you can, and want to take on the risk to trade gold, you can definitely do that. It's been pretty good. But as you can see, there's better performers out there, and U.S. Treasury is probably the best one. And here we have NASDAQ 100, which is doing okay, but compared to the other ones, I think you'd intraday probably get better performance with the other ones I just showed. Anybody got any questions so far? Because I just want to show you that these are things that you should not ignore. And as I've shown you, for those that are just joining, I can show you the performance lately in the last few hours. And this is using Oanda. So let me just show you the intraday move for, I think it was the Hong Kong. It's up 5%. That's just as good as any crypto you can get out there. And again, I don't see the same performance you would get with any forex as well. It's very rare to see a forex pair go over 2%, but there are some CFDs that will go over 3 or even 5% in this case. And Hong Kong's an interesting one to watch because when it's good, it's really good. And I do believe that is because of Oanda. A lot of the bulk of the traders are in Hong Kong. And you think that with the protests going on that would have a hit on the performance of the Hong Kong 33. It doesn't. So just things to be aware of and broaden your mind on where to invest outside of crypto and forex. Anybody else got any questions? So hang on here. So we have Spindies. Okay. So let me get to some of these questions. Okay. So Trading Al asks for US, look for an ETF. I would, but you have to be very careful now with ETFs because it depends upon what is in the ETF, the holdings. So if you have an ETF that is is lagging with some of the bigger stocks, you have to be careful of that because they lag and they don't recalibrate the ETF often enough. But if you trade in the ETFs that focus on treasury, gold, you should be doing okay. But from an algorithmic standpoint, I'd probably, if you can, start looking at interactive brokers for some of the other assets out there that give you some liquidity. I'm not in that space right now, and we've got confirmation from somebody on the chat server that you probably need about a $40,000, $50,000 account to do it right. So it is for the bigger boys out there, and those that are willing to put on a higher risk. So hopefully I'll answer your question, Al. Other spin dizzies, so we should trade using momentum-based conditions. Now I know Spin Dizzy's been on a holiday. I've been focusing a lot on mean reversion. Right now, momentum is doing well. If you were around, was it Saturday? There was an 8% move on Litecoin. The overall crypto weighted average on crypto was over 6, which is like really high. And if you saw my Instagram account, and you were trading that just on a really small account, you'd be up $300-400 just from the Bitcoin moves alone. Like I had one position I showed that had a $100 position. So when you get the momentum calls right, especially on a big moving asset like Bitcoin, you can do really well, like really well in a matter of a few seconds, because Bitcoin is so valuable and you get that call right. So that's where momentum really works. But when it moves against you, then yeah, you'll lose fast as well. But that's where momentum is really, really good. Right now, if you looked at the forex pair of let me just load up my trading view here. Okay, let me just load up trading view. So if I was to show you the euro against Australian dollar, I mean, this is basically the market. That instrument right there is saying, throw money at me, I'm guaranteed to make you money. Because if you look at this pair, your heart would stop, because it's just almost a guaranteed way to trade. Because Thursday I started tracking paper trading positions, and this call was so good on Thursday, it was 94% win ratio. And the reason for that is, let me pull up a one-day chart. The one-day chart right now is not that strong, but maybe I can pull up the 5-day to show you on Thursday. It was just an unbelievable day where, I'm just looking for my 5-day. But there was an opportunity where 94% of the calls on the forex pair of Euro Australia were 94% winners. And the reason is because, if you know, I've been tracking via the long short position. I know you're asking about it, Spin Dizzy, but I'll show you others so people know what this is about. So if you go to Awanda and you look for something called long short positions, right here. Right here. They don't advertise this. I don't even think they have this anymore as a feature in their system. So right here, let me just pull up the other link just to show you what it is. This is an unbelievable, very powerful indicator. Let's see, they only make it available for clients. So let me just see here, marketplace. Okay, so this is part of their, I believe, their platform. So basically what it is, so they've even pulled the video here, but in a snapshot it's so good, this thing, is it gives you any asset instrument that you track on Awanda. It can give you the percentage of longs versus shorts for that position in real time. So it's very valuable because it's a way to confirm market direction or trend. And what I've been tracking, and I can just show you, let me run this script. Let me just see if I can run this. Here. I'm going to show you one of the samples of what this thing can do. Okay. So if I go into my CFD, okay, so this is going to be an old sample I'm going to show you. Helps to be in the right directory, but you can only get this through the API. No, very few. I don't know if any platforms offer this to you. Let's see if I have it.
Hi, Brian.
Hey, how are you?
Good. I have a question about this.
Yeah.
Yeah. First of all, the link that you just opened for marketplace at Oenda,
Yeah.
can you put it in a chat also, so I can? Yeah, because I am not able to see this one, because when I try to open this, they say it's for the live people only. I mean, live account and stuff like that.
Right.
So
Well, I think the problem is, I just put it in the chat box. This website here. But what it is, and I think you can only get it through the API, as I said. So right now, this is how I do it. So these are the only pairs that you can track through Awanda. It's 18 pairs. These are the most liquid, because I think Spin Dizzy was asking on the chat if it incorporates spread. Spread's not a factor because these are your top 18 pairs, right? So these are going to be very liquid. But the one I want to show you is the Euro Australian dollar right here. So this one's the only one that's performing really well over the last week. And this is right now, as I said, this is telling you I'm going to make you money. It's just the market screaming at you. Why? Because 76.9% of the positions put on Euro on Australian dollar, 76.9 are longing, meaning they're going up. It's driving up the price, and only 23% are short. So this is just a factor on when the price is being driven up. So I can also, as I said, calculate the spread as well. I've shown that in the past. But what I do here is I always look for this long-short ratio. And that's at right now 3.33%. So it's another way of saying for every short, there's going to be 3 longs, which means it's a very high percentage of longs. And there's some other ways to look for short opportunities as well. Like here, New Zealand against the US dollar. That's a short opportunity. Why? because 66% of them are short. And there's this is the only long opportunity I have with the euro Australian dollar. But if you use the same logic but reverse it for short opportunities, there's quite a few. Euro against the Japanese yen, so 68 to 31 short opportunities. So there's lots of short opportunity. And when you get it right, you can add in your leverage and you can do really well. And as I've been testing it for Thursday night, 94% of the position calls were correct. So this is an ultimate way to do this methodology, but you can only get it through the API. I don't believe you can do this through MetaTrader at all. And you can't
But can
automate.
you showed just a link, right? Do you open that part and there was a 70 and 23 also, like a 70-30, 70-30. But how do we get that? I mean, I didn't get the link in the chat box yet.
Oh,
Did
it's
you
in the.
paste
Oh, well, what I just showed you, the marketplace. This guy,
Yeah,
right?
that one, that link.
Yeah,
The other link.
this
Yeah,
one
this
right here. That's the marketplace.
Yeah, can you paste that link in the chat box, please?
Which one? The get started?
No, this one. This the one that we are seeing on the screen, like the marketplace.oenda.com. I want to visit the same page, the when you have it on screen.
Yeah,
right
yeah.
now.
But all you gotta do is just copy it from the chat box.
But I don't see it in chat box.
Oh, you don't? Here, let me put it in again.
Yeah.
Just scroll to. Oh, I'm sorry. I just posted it to somebody else privately.
Oh, okay.
There you go. Can you see it now?
Oh, yeah. I see it.
Okay, cool. Thanks for
Thank
noticing that. Sorry about that.
Yeah.
But like I
Yeah.
said, this is kind of like out there, but it's like I don't know why Awenda's pulled the video. They only make it available for the clients of Awenda. But even if that's the case, you still have to automate this somehow. And as I said, like I've gotten a few confirmations that this cannot be done through MetaTrader, and the only way you can access it is through the Python API or through the REST API.
Now I have one. Actually, I'm tracking this because I have subscribed for that content analysis.
Yeah.
So, I have that downloaded text file that called long short fx.txt,
Yeah.
which has this information.
Yeah.
But I mean, I personally feel like I'm doing this for 2-3 days, and I feel like it's behaving like a contrary to this thing. But it is if it's long, then it's going short. If it's short, then it's going long. That's what I see.
Yeah, but
right now.
don't forget this is in real time. Like I generate this file every 2 minutes.
Right.
So if you
Yeah.
so if you do it like let's say you see the long opportunity, but you try to trade it an hour later, it may have reversed.
That's true. I'm doing a frequent download like during the day, like every 3 hour, 4 hour
Okay.
to see. And then actually when I traded this GBP CHF also, I traded short, but then it just went long. So I didn't put the second trade. But now I'm tracking all these three ones, which is a GBP CHF, which is a short.
Yeah.
Then there is a Euro Australian dollar, which is a long.
Yeah.
And AUD JPY, which is Australian dollar and JPY, which is a short.
Right.
Right. So I'm trying to track because they have a distinct values like 70-30, less than 7. I mean, more than 70-30 difference.
Yeah.
Right?
What there's it sounds like the timing might be off for you, and the other question may be like a great example. What I've noticed is, let's say you were to trade the euro US dollar. If you were to trade that right now, this is not a good one because it's not strong enough to be either a true short opportunity or a long opportunity, because I've seen it where it goes back and forth very quickly.
Right.
So the only way to do it is when you get your, this ratio, long short ratio, let's say above 2, which is like 66% of those are long, right? So it's a pretty strong indicator to use to say, yeah, it is a confirmed strong opportunity versus something that's, let's say, 55 versus 45%, because it moves around so quickly. So right here, this is a good short opportunity right now because it's at 66% on the short side. But again, it could flip, and there's many things that can make it flip very quickly. It could be news. And the other thing that's very important is you've got to factor the timing of the day as well. Because
Right.
once, let's say the U.S. markets close, and then there's a U.S. dollar opportunity, as Asia opens up, you'll start to see that U.S. dollar opportunity fade. Or if it's in Asia and the Asia markets start to close, that can happen a lot as well.
Right.
So yeah, there's some hints here of scraping, because I know Spin Dizzy likes to scrape, and he's really good. So you might want to capture these tips from Spin Dizzy about, we could try to scrape the link he said, but the API is the easier way, and I agree with that. Let me take out what he's highlighted here. The scraping can be a problem because a lot of the exchanges can boot you out based upon your IP if you're putting in too many requests. So this is live, so yeah, you have to be a customer of this as well. Thanks for the tip, though. Yeah, I noticed this as well. But the API is the better way to go. And there's different options if you try to look through on GitHub. So if you do GitHub, Oanda, Python, what's it called? Order desk or order book. As an example, this might be an example here. I can put this link here, but it's just a little bit of digging around on the official Oanda Oanda repository. But it is a tricky thing to do because everything's being returned back in REST, and then that, if you were to transform that into a Python object, it's a dictionary. And if you want to work with data frames, then you have to convert the data frame or the dictionary into a data frame, and that can be tricky to do. I should do a workshop on that. I think that'd be really useful for people. Any other questions at all? Thanks for joining us, everybody. I appreciate it. Oh yeah, I can definitely do a live workshop. We'll work on a date. I don't know if everybody's using. That's a customer of mine that is on the chat server. This guy right here that I got, our private chat. And for anybody new, that is when you join anything, you'll get access to that. And through that, what I do is I make the link available or the server available to anybody that joins, and then a lot of my private stuff gets posted on there. That's where I came up with the mean reversion, thanks to a few people on that chat server that helped guide me to optimize the mean reversion strategy. Right now, everything's looking good on the momentum side type of strategy, but as a good example for crypto, as the markets have come off in the last, well, we'll say week or so, where there's fewer momentum-based type of opportunities, the mean reversion will become more critical. But another reason why I'm showing you the CFD stuff is because this is just another way to diversify your view of the market to get better performance. That's all I'm doing with this particular topic. Anybody else got anything they'd like to add or question? Criticize, I'm always open for too. Anybody out there? Yeah, here. Anybody got questions, comments? So I've posted a sample. If you want to get a sample of what I've shown you, the reports here, this Word document, it is available on my blog. I believe, like I said, I'm posting some images from these reports, but I can show you where you can get it. I believe, yeah, right here. This guy right here, this link, I'll put it in here. That should be the link where you can get the download samples. Yeah, right here you can download these reports I'm showing you. It's from a few days ago, but it's that trend I've been showing you on the CFD side has been holding for the last week or so. Pretty well everything. Anybody else?
And Brian, one more thing. This ratio that you just showed, like long short.
Yep.
I think I mean, I have been watching them for like a couple of days.
Yep.
They are been pretty consistent. Like it's not abruptly changing like a Euro USD.
Yep.
Like when it's in the range of 70 30,
yep.
like this one.
Yep. This one here.
GBP CHF 28 and long and short.
Yep.
28 over 71.
Yep.
They do pretty. I mean, they stay like that for a while. So it's a good thing that we get. We don't need to get intraday trade like a 1 hour trade, 2 hour trade. We can put the trade on and then wait for. I mean, keep chasing this ratio. If it changes, then we can take off. Otherwise, we can keep going with thing.
Exactly, because this euro against the Australian dollar is very consistent, as you said. That's why I love it. And for a while, if you know it's working, I think we mentioned this a week ago or so. If you know your ratio, your long-short ratio is 3.33, you can use this ratio as a measurement for leverage. And you know that's going to be almost a guaranteed way to make profit on that position. Then you can lever up on that particular position. And that's where you can magnify your profit immensely. And same on the short side as well. And that's what I love about, as you said, about the forex side of things. Whereas in crypto, it's very inconsistent on an intraday level. But if you get the calls right on the daily calls on your crypto, you can do really well as well. Especially on things like, obviously, Bitcoin and Ethereum, because the moves are so big. The other thing is I put on my chat is I came up with an idea, and I'm going to try to get some confirmation where you can use BitMEX, because remember, BitMEX is a futures exchange, and the only things that you can trade on of importance on BitMEX is Bitcoin and Ethereum. Because BitMEX is a futures exchange, you can then use the same data from BitMEX to add to your predictable calls for both Bitcoin and Ethereum. So I'm thinking of building something around that because this right here, as you said, the mesh is very, very powerful. And if you know that the futures market in Bitcoin and Ethereum will go this way or that way, and you can use those predictions for your own trading on another exchange, like in my case, Kraken. And if you can find a way to find predictable trades and calls from it, you could do quite well.
Right.
Yeah, that's for the crypto. But I think like it's so volatile in crypto that you may need to slow down the period to more like either a 4-hour or even a daily chart, because it's just so volatile in crypto. You can make decent little money here and there on an intraday play. But from what I'm seeing over the last few weeks, especially with Bitcoin.
Brian, I have a question.
Yeah, go ahead.
When you're taking a play and making profits in the forex,
yep.
Let's say all things considered that you actually had everything all in place, that you didn't have to, you didn't have to worry about the data infrastructure or anything like that. But let's say that you were able to simultaneously convert that into a form of providing some of that savings in the form of slices into transaction engines over CMS and into purchasing
yep.
that was done in e-commerce online.
Okay.
And at the same time, you had some portion of futures forward crypto that was going to be smoothed out against in the future, that there was some commit against that was for the form of a smart contract.
Okay, so I'm trying to understand your specific question. So, are you saying that you use futures?
Would that work as a way of taking the current gains and deferring them for, let's say adding, if you could, through being able to take advantage of tax equity gains.
Oh, I see what you're saying. Okay, so there's two asset classes that I can answer on. Forex, as we've talked about with the euro, Australian dollar, as Nimish was saying, that this combination on a long opportunity has been pretty consistent for the last couple of weeks. So if that holds over the next few days or even next week, you can use that as I won't say guaranteed way of profiting in the future, but as long as these ratios hold, the long versus short holds moving into the week, obviously you can profit off that and then take that as one opportunity. So in terms of crypto, you can make, the problem with crypto is there's no guaranteed way to make guaranteed profit. But what I've done is I've calculated. Let me see, I don't know if this will load up or not. But what I have is I've used a equivalent of a volume weighted average among the big coins. So let me see if I have it here. So this is what I call crypto risk. So right now, yeah, I don't have it. But what I do is I'll measure Bitcoin, Ethereum, Litecoin, and Bitcoin Cash, because there's such big crypto coins out there that I do a volume weighted average among those four. And then if I know it hits a certain metric, then I know that the momentum is available in there to make profits. So what I'm saying is now a new, I won't say guaranteed way or guaranteed condition to profit in crypto, but what I do notice is that when you have all four moving in the same direction and when you combine their volume and their price moves, it sets up a condition to trade. Saturday morning was a good example of that. And that is something that you can, again, I won't say guarantee, but you have a higher probability you can profit from for that time period by watching that volume weighted average among those four coins. So
now, by the way, let me also ask you something just to keep in mind for the future.
Yep.
You don't need to answer this immediately or right away or anything like that. Just keep in mind, because sometime in the near future, I want to be able to set up for being able to run a crypto sandbox as a way to provide an ability to have people run riskless practices for which my take on it, my rate on that is going to be using that as an attractor to take commissions off of e-courses.
Yeah. Okay. Yeah. But it comes back to there's two types of strategies we're talking about for that. So the forex that I mentioned with the euro against the Australian dollar is a momentum-based trade. As long as that long versus short holds, you have a momentum-based trading opportunity. It's spanned out for a couple of weeks, so that you could use as a way to sort of say, hey, this is a way you can make money. For let's say you want to build an e-commerce site around that and have customers pay you for those kind of calls. Am I correct on that? Does that make sense?
My apologies. I got somebody. I've got company. I've got to go.
Okay, no worries.
Okay.
Okay, I'll make this playback available for you if you need it.
Yeah, thank you.
No problem, thanks. So, have a good day. So we're going back to Al's question, is Kraken on any exchange safe? I know you answered the question because Binance was hacked. My buddy says I received my money back after the hack. QTUM, I think this is the second question. QTUM against USD on 15% drop to 10%, and XTZ against USD on 8% on Kraken exchange. All right, so I'm assuming that's two questions in one. Is any exchange safe? No, it's not. As you said, Binance got hacked. Depends upon the exchange if they have enough liquidity in the market that can guarantee if something happens to the exchange that they will allow customers to recoup their losses because of the hack. I think Binance is big enough to handle that, but yet there may be other larger exchanges out there that are Asia-based that might not have that kind of promise or guarantee as an exchange. So as long as they can guarantee that if you do get hit on your account from a hack, yeah, Binance is definitely one of them. Other ones I can't say based upon their credibility or their reputation. Is Kraken any better? I can't say, but let me say this, that because Kraken is regulated by the U.S. Regulators, be it SEC, they're going to be in a position to cheat less. So is that going to say they're safe? No. But when you look at Bittrex and how they're the guys behind Tether, and the New York Attorney General clamped down on them and said, hey, you're a scam, and we're going to investigate you. Even though they're still kind of falling under the regulation of the U.S., it doesn't guarantee that that exchange is going to be any better. So you always have to view it from that point of view, where if an exchange does get hit by a hack, will they allow you as a customer to recover your losses from that hack that can impact your account? That's the question. Okay, so there is no FDIC insurance on that as far as I know. I don't think there would be. We don't even have really any insurance here in Canada for anything other than your bank account, and that's even only insured up to 60 grand. So it's very, very pittance when you think about it. The question is U.S. can't trade on Binance, correct? Yes, that is right. They just announced a few weeks ago where Binance are kind of tired of the regulation out of the States, and as a result, they're stepping away from the U.S. market. And I think Huobi is going to have a way to allow Americans to trade. But again, it comes back to, is that exchange reliable? Even though they will support the regulations in the States. Whereas you have an exchange like Kraken that's been there since 2011. It's one of the oldest exchanges out there. I would think they play ball. They've had a lot of problems, but I've heard in the last year they've addressed the technology to make it better. They've also bought Crypto Watch, which is a really good platform. So there is no guarantee, but that's just the view I have of it. So Trinidad says, after a positive gain cash out, place it onto the ledger, right? Yeah, I would think so. I would think you have to figure out what your tolerance is for how much you want to allow to be on the exchange. So if you were in the Mt. Gox days, or even here in Canada where we had Quadriga CX, I heard stories where like $500,000 somebody left in the exchange. The exchange goes bust or whatever, or there's a scam where the owner takes money out of the customers' accounts. They're not guaranteed. And I don't know why somebody would want to leave $500,000 in an account on crypto, but that's up to them. Even 10,000, you have to figure out what you're willing to lose on that exchange. And that's not just with crypto. That could be said also for a forex broker or a equity broker. So you have to factor that in, what you can tolerate, what you're willing to lose if you were to lose it all. And as you said, to withdraw it onto something like a Ledger wallet, yeah, that's something I would really recommend. The beautiful thing I will say about CCXT, the package, is that you can set up automation to automatically withdraw out of the account using CCXT. So if you have a certain percent you want to withdraw out of the account, put up your Ledger wallet and you're good to go. Your wallet ID. Kraken, what about the fills? Did you get filled and easy to sell? It depends on the coin. Bitcoin can be slow because it's lower traded by volume. Liquidity is not a huge concern compared to Binance is way better, obviously. Kraken, I don't see any big problems with it. It's just its lower volume. But with the coins that Kraken support, they're usually in the top 15 of volume on coin compare on crypto compare or coin market cap. So the coins are liquid enough. So Kraken, out of all the exchanges I looked at, I think Kraken's your safe bet. I think with you, we looked at Coinbase as well. Coinbase may be even a better one. The problem with Coinbase, it may have higher volume, but the coin selection is not that good compared to Kraken. And you'll miss out on those opportunities on the other alternative coins out there that other exchanges like Coinbase may not support. So you have to factor that in as a condition as well to think about. But from what I've seen, Kraken's not a bad US-based exchange, not the best, but Coinbase is the one to watch. That's a definite. Because last week we looked at the volume and we saw that Coinbase had higher volume than Kraken. So you may want to consider that. For all the reasons you mentioned, I'm glad you partly moved to FX. Yeah, Spindies, that's why I did that, because Forex, out of the experimentation I've had for the last couple of months with Forex, there's definitely a lot of opportunity in there. And as you said, diversification is key. Yes, it is. And right now, crypto's not doing, it's doing okay. But Forex, there's like one pair that we've identified, this euro against Australian dollar, that is just kind of like an opportunity that's been there for a couple of weeks. And on the short side, it's the same thing with the other ones as well, which I've not looked at. But it's a way to diversify. And one of the other areas that I want you to take away from this is CFDs as well. Like I said, gold, treasury, look at those. If you have a big enough account to trade those when the markets go bad. And obviously, equities themselves can do really well too, like for the last 10 years. But they are going to be the best performers moving forward. But Treasury's doing well, gold's doing well, that gold-silver ratio's doing well. And there's some other exchanges out there that are doing a little bit better than the U.S. And they may do better when the U.S. markets come off. So, yeah, diversification is key. Any other questions, comments? At all? Anything? We'll do another topic next week. I'm not sure what it is. I do these last minute. Just depends what I'm looking at. I kind of knew I want to talk about CFDs a bit. I might talk about more trading results. I'll definitely try to figure out where to go with that Awanda API workshop. I think that'll be really useful for everybody. That's part of that. And we can do it live as well. As Awanda, as a broker, I'm not a very happy customer of Awanda. I'm going to be honest, I don't like Awanda. Their customer service is, to me, non-existent. Their tech support is questionable. Here's the problem, though. When you look at the Forex broker space, there's not a lot of Forex brokers you can rely on. Spindizzy, apparently you can get an API key with a practice account. That's correct. You can definitely do that and trade real market data, I believe, through the API. But I was just saying about Awanda, you got to be careful of them, but all the brokers out there, you got to be careful. The only broker from what I'm seeing that's good for forex is LMAX. A lot of people like LMAX, but you have to have 10,000 US to start with them. Can we apply algo to swing trading too? Yeah, obviously, yeah, absolutely. And that's forex if I'm referring to. Yeah, you could. It's not as it's nowhere as volatile as crypto, so you can get some nice pairs in there. I'm going to be experimenting with a pair trading with a mean reversion, so I'll be able to give you a definitive. But from what I've seen, from an co-integration point of view, it's always the same two pairs. No different than the euro and the Australian dollar. There's a consistent pair that seems to co-integrate quite a bit consistently. I think it was the euro. I think it was the euro British pound, the British pound against the Swiss franc, the pound against the franc as the short. I haven't looked at it in a while, or in the last week or so, but that was consistent when I did look at it. So it may be still consistent. And that's what I kind of like about forex. But when you get the calls right on the forex side with the leverage, man, you could do well. You could do really, really well. Any other questions or comments at all? So we'll leave it till next week. If you got any questions, just go on to the chat server if you're new. Join something on my store, and yeah, you get access to the chat server, and you get to see all the dialogue. Go ahead.
Yeah, Brian. I'm looking at actually that long short position for the forex.
Yeah.
And I have downloaded it over from like 20, June 26, June 27, June 28, and all those following. So actually, I generally like to compare it because it keeps changing little bit, little by little, not too much, like 22 to 24 to 25 and stuff like that. So if I'm having a position, like let's say I started position on 27th of June, and I keep calibrating that, okay, shall I be in the position or shall I change it now or close it now? So in that way, when I open that text file, I open multiple text file. Is it possible to put a date stamp on when we download it or something on those files so I can compare? Because right now when I have opened 3, 4 of them, and they with that one we can't tell which date or time it was when I open it.
You know what I'm going to do is I might be able to, like I have a way to send out signals, so I might be able to send that out as a email, like email it to you for a certain time period. But what you're looking for is a timestamp for that file. This particular file I'm showing right now, the long short.
Yeah, this file actually, I open the text file on my screen, and I open multiple text file, like one from the 26, one from the 27, one from the 28.
Yeah.
But the whole file has all details, the one that is showing up on the screen.
Go ahead, continue.
Yeah, but it doesn't have a date and timestamp. I mean, it does have when it's in Windows Explorer, it does show me when this time, what the time and date is. But once I'm comparing side by side, there is no stamp on those pages, page 1, page 2, or anywhere.
Would it be better for each section I put in the timestamp for each pair when it's generated?
That is also fine, or maybe on the top. The whole document is generated at what time?
Oh yeah, I can do that. I'll make a note of that. That's a great idea.
Yeah, so basically, I'm trying to see where this pair is going in terms of long and open position ratio.
Yeah.
Basically, right? So what I'm trying, and I'm actually going to put. I mean, after watching a couple of days, I may start trading this thing because this is a really good distinction of long and short position, like 22 to 27 for the trading.
Yeah.
So, but again, see, when I see this, they keep changing fractionally, like from 22.8 to 23.5, then 24, and then 25, and stuff like that.
Right.
So, based on that, I can decide that, okay, I will keep it up to 30. If it's 30 and 70, then I will take my position off or something like that. So for that one, to get the statistic or to get that analysis.
Yep.
When I open those multiple files, it will be helpful.
Okay.
If the document has the date and time.
Yeah, I can do it. Just email me and I'll make sure I put that in. That's a quick fix. I can put that in right away.
Oh, okay.
Just email me and I'll put that in and I'll let you know when it gets done. That's a fantastic idea, actually.
Yeah, because now when we have a multiple statistic every day and every few minutes you have generating it. So like I'm trying to download it like 2 to 3 times a day.
Yeah.
And then see where this pair is going.
Yeah.
And at least I will be actively watching it if when I have my trade on, right? Yeah. Because I don't want to keep sleeping and the pair goes other way, like long and short ratio changes a lot.
Yeah.
So that's where it will be helpful. That okay, this text file is from morning, this text file is from 12 o'clock, this text file is from 4 o'clock.
Yeah.
Even within the document, I mean, I definitely know it when I see the details of the files outside. But when I compare one side by side, all those that will be really helpful.
Yeah. So what I can do is I can do something similar to this file.
Does it have this?
Well, I don't do it in this, but I'll say current time.
Yeah, you see this current time of this. Yeah, that's kind of thing. Yep. Current time of the file that's when this was generated.
Yeah.
And within the file. I mean within the file.
Within the file. Yeah, I can definitely do that because that file gets generated every 2 minutes.
Right. Yeah, that's true. So and I'm also planning to download it maybe 2 to 3 times a day at least.
Okay.
Just to watch my position.
Right.
And ratios. Like, are they still compatible to keep on, or shall I close the position?
Yeah, you're referring
like
to this.
That.
Are you also finding this stat here useful? The rate of change percentage over the last 4 hours useful?
I didn't look into that much. I'm just looking at a macro
the long short ratio
numbers. Yeah, ratios.
Okay.
And total long and short. So and actually I was looking at actually I put a trade on this Euro CHF.
Yep.
By using that p value thing, right? You know that point FX. There was one more document Excel file is there.
Yep.
That's the name. 1 second, I'll tell you what the name is.
Okay, I can probably look up a sample of it.
Yeah. So 1 second. Huh?
Yeah, I got all the files here.
Yeah, it says coin TFX.
The coin T. Yeah, this one.
Yeah, this one. So I looked into that one and I put the position that way.
Yep.
And over the time, the p value within this it's opening, right?
Yeah.
Okay. Yeah, so within the p value was changed. Like point zero, you mentioned that if it's less than 0.05, it's a good thing, or 0.05 or around that, right?
This is the pair I was telling you that is co-integrating.
Right.
But this isn't quite co-integrating into the future because it is at 0.057, but it has to be less than 0.05.
Yeah.
To be
when I put my trade on for the Euro CHF, it was 0.02. And after 24 hours, it became 0.06. So I took my trade off.
Yeah.
I mean, it wasn't success, but that's okay. I'm still in learning stage of this, how to apply these things.
Yep.
So that's fine. But now I'll be relying more with that long and short position ratios.
Yep.
Plus this thing. Let's see how those play.
But did you see any potential with this?
No, actually when it was 0.02, and I in Euro CHF was a long side. I put the trade on, and that didn't work out. And eventually I waited. I thought because I was waiting due to the reason that p value was still in limit.
Yep.
So, but when it became 0.06, I took that off. But then now when I see that particular Euro CHF pair with that long and short position ratio, it was never there. Like it's like 45 and 55. So I shouldn't rely on just only on this and put the trade on.
So what I'm going to go ahead.
Yeah, rather I should look for that ratio because that's a more telltale sign rather than this p value. That's what I'm. I'm doing this for last since I started the service subscription.
Okay, great.
So yeah, so that's I'm already analyzing and preparing myself for the trades.
What I'm planning to do is as I said, I'm gonna have a live signaling service, so it will email out the entries and exits on both the pair trading strategy that you're speaking of, and also the momentum. So if there's trading opportunities, let's say in this pair, based upon the long short ratio, I'm also going to have another
You see
one.
that long short ratio, because even right now when we're talking, I checked again on the same day when it was a 0.02 p value, but long short ratio was like this only, around this 45 and 55.
Yeah.
So that I shouldn't only rely on the p value thing. Rather than I should, because this is more robust information,
right,
or more thing that I feel
it sounds like the timing is a problem, because if it is approaching the 0.05 and it goes beyond it on the p value, you obviously have to exit out of those positions.
Right. Yeah, it was 0.02, and then when it became 0.06, when I saw again after a few hours, then I took my position off rather than waiting for to cover up the losses and stuff like that. I said no, let's take it off.
Yeah, well, I'm going to look at that hopefully later in the week.
Right.
For this, because if that's your entry and exit based upon the p value among the two pairs or the one pair, I'll definitely, as I said, I'll put that into the signaling service that you'll be able to position the proper timing for the for the entry and exit of the pair trade, and using the p value. So I'm hoping to do that.
Yeah, but now I think that because by watching it for a few days, last few days, I feel more comfortable to use this information on the screen, rather than the p value. So I'm keeping my eye on this. That's why I mentioned that I have opened multiple text file on my screen right now. So I can see the difference, like where it's going.
Right.
Is it long and short ratio changing? How much is changing?
Right.
At what pace it's changing and stuff like that.
Yeah. Well, like I said, go ahead.
Yeah. So based on this, like suppose AUD JPY, it's really good difference between 22 and 77. Like, right, the ratio is 3.38. So this is not, and I will keep willing to trade using this short until it's 70-30. Right. It reaches to 70-30. And then I said, okay, now I made up some money, let's take it off.
Right.
Something like that. Or maybe at least I'll take some profit off the table when it reaches to 70-30. And then we'll put.
Go ahead.
Yeah, and then I'll put something like a trading stops and put for the rest of the position.
Well, like I said, I'm wanting to build a whole trading signaling service out of that based upon.
Right.
Yeah, because that's where a lot of people struggle, and if I'm testing that trading the euro Australian dollar at using these ratios for a long opportunity, and as I said on Thursday, I had 94% of them correct. So if I have a whole signaling service around that, where I'll email you out the entries and exits, that's what I'm hoping to build for you.
Right.
And the other thing I'm wanting to do, are you using Oanda as your broker?
No, I am using forex.com as my broker right now.
Oh, okay.
Because I'm still not. I've also purchased the Python course, but it's a long way to go yet.
Yeah. I have a lot of people saying the same thing. That's why I have this analytics service. But what I'll do is, if you go with Oanda and use a signaling service, what I'm hoping to do is to put up on GitHub source code in Python that will read the emails from your email service, and then it will filter out all the buy and sell signals or the entries and exits. And then because I have a Python script, it'll run looking for those emails and those signals. And then all you got to do is put in your account information, your token, your secret token IDs, and that will automatically trade for you. That's what
that's fine. I mean, I will be okay. I will be open to open another account with Oanda also.
Okay.
But since you see these ratios, they are not moving drastically immediately. Like after 1 hour, you don't see that it's a 60-40.
You're right.
It's a yeah. So this gives me opportunity not to be on my toe minute by minute. I just have to check it 2 to 3 times a day
Yeah.
and see where it is, and my trade can go for a while. I mean, it's okay. I mean, I understand that I may not be watching it for whole night for like 7 or 8 hours.
Right.
During that time, something can happen.
Right.
But again, I'm right now as a analysis and as a trial thing. I'm using my stop losses, so my whole account won't get wiped up of this thing.
Yep.
So that's there is there.
Yep.
But yeah, again, signaling service, as you mentioned that way, by automatically reading the emails and everything, that would be more precise.
Yeah, that's what I'm hoping to
and-
build. I've tested it in the
Right.
winter, and it can work well. And then all you got to do is I'll provide the source code, the Python source code that will read your emails and then trade based upon those signals.
And that will provide same level of machine trading or algo trading.
Yeah,
as you do it.
Yeah,
for yourself.
Yeah, well, that's all it is because it's signaling from this API, and then you have the
Right.
trading logic, and it generates a signal for you at your end. When you get the email, you have this Python script available that will trade off of those signals, the entry and the exit, and I'll have it for both crypto, forex, momentum, and the mean reversion as well.
Yeah, because right now, see the level of proficiency for the Python you have. It's really going to be hard for us to achieve in near future right now.
Yeah,
right?
I understand that.
And this is only helping you as a developer on your account. But when you start those signaling service through the email and will automate our all the customers trading, our clients trading also.
Yeah.
That will be put us in the same spot as you are.
Yeah, that's what I'm hoping to build out. That's correct.
Right.
Now, I think it was yourself that mentioned it a few weeks ago, and I was like, the light went on.
Yeah, that's true. I mean, because see, right now the system, these all signals are generated automatically for us.
Yep.
But again, on our side or my side, it's still a manual thing for me.
Yeah,
I
I
have to
understand.
go check it and then do the needful.
Yeah, I understand.
Yeah, so that's a good one.
Yeah.
Good.
That's what I'm hoping to build out because, as I said,
Right.
even if you were to try to build it yourself, only using one of the because actually Trading Owl asked, what platform are you using for FX, Oanda? I'm just using the Python API. So there is no platform, just the Python API.
Right.
But all these features seem to be only available through the web connection into Oanda.
Right.
As a customer and programmatically that I've seen that's available is through the API. But yet they've purposely not hooked it up into something like MetaTrader.
Right.
So this is the only way to do it is through something like Python. And even if you're a software developer using the Oanda API, it's a very, very tough API to work with.
Wow. Okay.
And using Python with the course that I've got, if you're sticking with the data objects of like data structures like data frames, life is easy. But it's converting the data over from what Oanda provides into the world of data frames. That's the complicated part. So, like I said, I'm going to do a workshop on that. Yeah, Al's got some other questions. If I move to Canada, could I trade on Binance? I don't see why not. It's just the U.S. is the problem. That's it for Binance. And what's the number of open interested? What is the number of open interested for hedge funds? I believe the numbers come out today. Yeah, they come out every Tuesday through the COT, the Commitment of Trader reports. I don't know the actual volumes. I haven't looked at it in a long time, but that data is available. The problem with that, it's only weekly. So if you're trading on a weekly basis and holding positions on a weekly basis, that's definitely going to work for you. But if you're trying to magnify it onto an intraday level, you can do much, much better on an intraday level. As an example, this Euro Australian dollar, because this can make you multiple times of profit on a lot of positions in a day spanned over 5 days. So the commitment of trader reports are okay, but they're more used for commodity trading or stock trading on long-term position holds, from what I've seen.
Right, but are the COT, the commitment of trade, does have any useful way to decide those? Because what happened is I have that indicator for the MT4 platform,
Yep.
Which plots those things,
Yep.
and I can maximum use for day trading. I mean, not day trading means day on daily chart like D1.
Yep.
And that's there. But again, they also keep changing the position like those ones. So sometimes even when we see like a divergence in the position and stuff, then also we are not able to decide on the trade based on those values.
Yeah.
So I'm still trying. I don't mind if I have to keep a position open for like a couple of months if it's profitable in any way. Because since I didn't have a day trading information like this before, the one that is on the screen, so I was open to that as well. I said whatever brings the money, if it brings it in a couple of months or a couple of days, that's fine. But I didn't even find a profitable way to use that COT information.
Well, here's the problem with COT or any other thing. Somebody told me, and they're multi-million-dollar trader, and the simple tip was, wherever you get your data from, you got to trade on that data source. So if you're using broker data, like Interactive Brokers gives you use that market data, you have to trade in that broker. So it's not like you can say, okay, I'm going to get my forex data from Dukas Copy or forex.com, let's say, but trade what I see from forex.com and trade that off of that data in an Owando account. The data and the trading has to be from the same source. So because you're going to get discrepancies between the brokers, and that can especially be said for crypto for sure. Because there's massive discrepancies between each exchange, especially on Bitcoin, because the moves are so big, and even at a 0.01%. That could be a $50 or $100 discrepancy between two different exchanges. So you got to make sure that you are using the same broker for both your data source and where you trade. That's kind of a standard. 2 questions from Trading Owl came back. Is Owanda safe and it's not been hacked? No, it has not been hacked. And I met the guys that developed Owanda. They are originally from Toronto, even though it's got multiple owners now, but the head office is still in Toronto. I got a tour of the facility. They're still using the same technology, and they've never been hacked. Where the problem with Owanda is the customer support. It blows. That's all I can say about it. In terms of, is it safe from a market-making perspective? Yes and no. That's why I use the Fibonacci levels as my equivalent of stop loss versus a take profit. That's what I like about Fibonacci levels. He asked also, is PDT rules apply to FX too? No. That is pattern day trading rule. So if you're in the U.S., the freest country in the world, they put a rule on you as a stock trader in the U.S. that if you have an account less than $20,000, you can only do 3 automated trades per week or some stupid restriction. They do that because of the big exchanges out there. The lobbyists they're just so powerful. But for Forex, it does not apply. So the pattern day trading rule does not apply to Forex because Forex is its own entity and falls under its own set of regulations, which is another way of saying it's a Wild West. Trading Al also asked about, I hope to be on OpenBSD server. I will say this about OpenBSD, unless you're a very strong software developer where you can build and compile your own source code and projects and you're really good at it, yes, OpenBSD is really good for that. It's a tricky operating system to work with. I think if you're going to go into the world of Linux, you're okay as long as you're aware of the security vulnerabilities that Linux gives you from when you set up a Linux server, that you have to be aware of the vulnerabilities that are automatically open when you set up a Linux or set up a Linux server, and that's what kind of makes it, dare I say, insecure. Where OpenBSD, they think about these things and they have all the breaches that they know of an operating system. They by default turn them off, so you have to go in and manually turn them on when you set up your OpenBSD server, and it can be a very painful process if you don't know all the technical security features of an operating system like a BSD or a Linux, if that makes sense. So I just stay on Ubuntu, and I'm okay. I'm happy for now. But I don't want to complicate people or overcomplicate it with all the security features and scare people with Linux versus BSD. But I do know if you're on Windows, it's something to be concerned with. That's for sure. Any other questions so far? Very good session today, an hour and 20 minutes. All good coverage of stuff. You guys got any other questions at all? Like I said, Nimesh, send me out that request to get that timestamp put into the text files. I'll do the same for the crypto and the forex files, the long, short, and bid and ask files for both crypto and forex.
Yeah. Okay. Great.
Yeah. That's a very easy fix. Any other questions, Spin Dizzy or Al at all? If not, we can leave it till next week. And I don't know if Nimesh, you're on the chat server. If not,
I have to get entry on that as well.
Oh, okay. If you have any difficulties, let me know, and I can give you all the registration stuff on it.
Yeah, no, I didn't initiate anything, so I need permission or how to get onto that and stuff.
Yeah. Just let me know, and when you send out that request, I'll definitely give you the instructions on how to do it. It's pretty simple.
Oh, okay. And so, what is that chat? I mean, chat server, is it is somebody there? The community is there?
It depends. I know Spin Dizzy is pretty active on it. Al's pretty active on it.
Okay.
So we got some other people that hop in and out on it, just checking up on stuff.
Sure.
So it's pretty active.
Oh, okay. Okay, good. Okay. Yeah, I'll do that.
The more participants, the better.
Yeah, that's true. And we need a privacy.
It's privacy and anonymous. You can actually be tracked on it.
Yeah, I mean, that's true. We don't want to be on Facebook like that.
Yes. Okay. Couple of questions from Spin Dizzy. He said, "Good session. Thanks, man. There's a backlog apparently, on the chat server. Can you post questions about the algo course? Yeah, post. I don't know if you want to post questions here, Trading Al, or if you want to post them on the chat server. By all means, either one's fine. And there's no rules to break. When it's on the chat server, there's nothing to break. That's why it's private. It's anonymous. And nobody tracks it. Like if you were on Facebook or Telegram, it becomes a problem, right? That's the thing.
Yeah.
Any other questions? But yeah, it was a very good session. Thanks to you guys. The more you guys exchange and get active and stuff, we get good responses. People post.
Brian, yeah, sorry.
No,
Brian,
go ahead.
I know that you mentioned that this same similar kind of statistics is hard to get for the crypto, like the one that we are seeing on the screen, for the forex. But try if it's still possible that way. Let's see if we can get some order book information from some better exchange like a Binance, or maybe 2 to 3 together, like from multiple exchanges, order book access. Do we have that way?
Yes. Most exchanges give you the access to the order book. I know Binance does, Kraken does as well. The problem with crypto, as I said before, is it's too volatile. So that's why I'm going to be slowing down the trading just to daily for now.
Right.
And or focusing on just Ethereum and Bitcoin, because the smaller coins, they move around here and there, but they're up and down. And, you can make money here and there, but they're small positions.
At least we can start analyzing or reviewing them. If this kind of thing is available, like we can review it for 10 days and then we can decide, does this really work? Does this changes very overnight or like within an hour from 30 to 30-70, like that. So that way we can start the correlation, checking the correlation between this information and actual price movement.
I do have that posted already on. Yeah, I do. But it's really hard to find the paired trading. I think there's some fixes I need to make on that analysis because right now I only do it on minute. So that's what makes it volatile. So I'm thinking, do I do the analysis on a daily time frame for the co-integration, or do I do it on an intraday level? But the problem is when you do find an opportunity where it does co-integrate, it does not last long at all. Whereas if it's daily, chances are you'll find a more consistent co-integratable pair that will last for at least a few days. But it's not very often. And the ones that usually co-integrate are like ones where you have like something like Bitcoin and Bitcoin Cash, because the patterns are fairly similar because it's a fork of Bitcoin, or Ethereum with Ethereum Classic.
Right.
So I'm seeing certain pairs. I just haven't looked into it enough. But even if you do find a co-integratable pair, the problem is it does not hold like in forex. That's the difficulty.
Oh, okay.
But I'm going to be testing it, see what comes out.
Right. Okay.
Okay.
Okay. I mean, actually, in forex is also better because we can have a leverage here, and being in US, we still don't have a product that to trade in crypto with a leverage because I don't think they allow anything right now on any exchange.
I think Binance is loosening up on that, on leverage. I've seen some stats where they do show leverage of some kind, or I should say margin available. Right. So they are loosening up on that.
But again, they already decided not to let US people trade, right?
Binance, yeah.
Yeah, Binance. So that's also not for US clients.
And that's why I stay on Kraken, because it's based out of California.
Right. The Kraken, does the Kraken allow the margin trading or leverage trading?
That I'm not sure, and I haven't kept track of margin trading. But here's the thing that is the benefit of crypto. Is with crypto, because the moves are so wide, you don't need leverage.
Yeah, that is true. 10% a day, they're already giving you.
Yeah, right? You don't need leverage.
Yeah, that's true.
Yeah. Trading Al's got a question about ROC, rate of change, returns a list of positive and negative values. Should count positive and negative, sum them, look at the list 10 to 20 predicting a trend. I can post a question in the channel. Yeah, please post it in the channel or email me. I'll do my best to answer it, or if even a video helps out too, to answer those kind of things. Anybody else got any questions? Module 11. When people mention the Python course, the modules, I always forget what's in that course. But in terms of ROC, I'm assuming you're referring to TA-lib, the technical analysis. There's different metrics for each, but if you use ROCP, might be better because that is rate of change percentage. And if you use that, it's relative against other instruments as well. So you could use ROCP, rate of change percentage. Okay, rate of change is good, but it's relative to other instruments for comparison. So use ROCP. That'd probably be your answer right there. Any other questions? If not, I'll do it going once, twice, 3 times. Any other questions at all? I guess not. We'll do it.
No, things are fine. Thank you.
Oh, no problem. Thanks guys for coming out. I really appreciate it. This is a really good session. Very good. I learned stuff from you guys too. I just want you to know that. So I'll implement your change, Nimesh, and that should make life easier for you.
Yep, because that's what I do 3 times a day, 3 or 4 times. And I check where this pair is going. Like,
Yeah.
I mean, they don't move that drastically in the whole day, but again, to keep those changes in tracking,
Yep.
it's easier. As I mentioned, I may, for example, if I am short on this GBP CHF, which is 28/71, right? I will consider when it becomes 70/30 to take some profit off the table to in that way. So that I know that okay, I'm not waiting for a whole profit and then get nothing.
Well, I'm looking at if you got a long or a short where it's at least 66% of one or the other, chances are it's going to hold for a while.
Okay.
It just depends when you catch it, because sometimes they may just spike for a short period of time.
Mm-hmm.
So if you catch that spike on an early move, then you're good. But if you catch that spike on the tail end of it, you know what I mean?
I know, but again, I will still once I know this information, I will look for better support and resistance to get another entry.
Yep.
Because I know this is going to be going for many days, right?
Yeah.
And I'm not. I'm pretty sure I may miss it from day one. I mean, I'm going to keep eye on this all, so I will know that okay, if suppose AUD USD, it's a 37.62 right now.
Yeah.
But if it goes the other way, like 35.65, and then when it becomes 30/70, then I will keep watching that as well. That's why I have those old text files to compare with.
Yeah.
Well, okay, what's the change?
Well, I'll definitely, with that date stamp at the beginning,
it'll
make life way easier for you.
Yeah, so that way I know it yesterday today is what it is 37.62, and if tomorrow it becomes 70/30, 30/70, then I know that I am entering at the same time as this changes are happening.
Right.
And I'm getting the bottom or top.
Right.
For my entry.
Right.
So this is that's why I'm going to download and keep those history in my computer, like downloaded history of the files.
One thing I also track is for crypto that's really useful. Here, I'll show you. I don't know if you've seen this, but I don't know if this will show anything. But I have this thing called risk on log for the crypto. Let me just see if that. Okay, here it is. No, there's not much in it. But what it does, this is generated every minute, or every 2 minutes. So you can see it's got a time date stamp. So this is the weighted average I track every couple of minutes. So you can watch historically how the crypto market is doing overall. And then sometimes this weighted average will go, as I said, it went up all the way up to 6. That was like a guaranteed way to make money, and like a gob of it too. So if you track that, you can maybe see some trends using this capability of the risk on log for a couple of weeks and see the trend, how the overall crypto market's doing.
Okay.
So I'm looking at the same sort of thing for forex as well.
Okay.
Trading Al asks, he wants to take a look at FX. This is a good tip, and I agree with him. And I've known this for a long time, that Python stay away from object-oriented programming, and that's true because Python is a scripting language. It's not like a full-on language like Java or C++ or C#. It's not built as a object-oriented programming language. It's a straight-up simple scripting language, and that's how I built all my scripts for it. Just to keep that in mind, not overcomplicate object-oriented programming with it, because it's very confusing. And I keep everything sequential. People argue which way is better, but I think it's just a preference and simplicity too.
I think Brian, it's still possible to do object-oriented programming with it, right? Because I was reading the book what they did.
Yes, you can.
And it's there, right? They have a feature of OOP.
Yes. You can do it. The problem is that it can get overly complicated very quickly.
Okay. Yeah, that's true.
Well, as Al says, everything's an object. However, when you start using classes, it blows up the memory.
Oh, okay.
But that's one problem, and then the other problem is in terms of maintaining it. It's I don't know. It's not as easy as if it's in a proper object oriented language.
Oh, okay.
And I'm not a big fan of it.
Oh,
I just use it. Think of it this way: if you're familiar with like DOS or Linux, where it's just shell scripting, I just look at Python as a glorified shell scripting language, but on steroids.
Oh, okay.
Yeah, but in my previous experience, I have used the Java, and right now I'm using the SAS.
Yep.
They all have a similar kind of thing, like object-oriented programming in Java. In SAS, we have macros, which is a kind of objects that we use in our code. So in that way, I'm still sometimes leaning over that.
Yeah, well, it just depends upon how the software development kit that you're using, how it's designed as well. That's an important thing as well. But as Al says, it's a memory hog as well. But the JVM is optimized properly for it. You know what I mean?
Right.
And you can tweak the JVM as well, the Java Virtual Machine, to make it more efficient.
Okay.
So
Okay. Good.
yeah, we'll leave it at that then. It's been over an hour and a half.
Yep. Okay. Yeah. That's starting.
Oh, you can't. So Al's saying new JVM doesn't have XMX setting. Takes all the memory. Oh, I didn't know that. I haven't kept track of Java in a while. Now, what's it up to? Java 12 or something? It's so different. Not sure how it works. That's too bad. That was a nice feature of Java. Any other questions at all? If not, we can leave it at that. Okay, I guess we're done. Thanks, guys, for coming out, man. It was awesome.
Thank you, brother.
And Nimesh, get yourself onto the chat server if you need help.
Yeah. Thanks. I'll send an email to support, right? Support at
or feedback at quantlabs.net.
Okay, I'll send email with those two requests. One with the timestamp on the files.
Yep.
And second one with to get me entry in the chat server.
Yeah, chat server. Okay, great.
Okay,
thanks, guys. This was a great session.
Yep, thanks.
And we'll talk to you later. Have a good day. Later.
Yep.
Bye.